Gold is seeing a monstrous breakout, and I'm staying on the sidelines on the swings for another 1-2 days. So here's what we have to look at first. So the concerning thing on my mind for most of yesterday during the live calls was once again the VIX. Now we're looking at the close here, but in real time what we were looking at was a monstrous move higher on the VIX, and at the time we were looking at the S&P, most of the indexes actually in time, in that early morning session, quite literally starting to push higher. So once again, S&P going up, VIX going up, and not only that, at one point it did actually put this monstrous spike in a short period of time, 1 5-minute bar. So again, it just is concerning at the moment. The other thing that started yesterday is the gold breakout move. So is this the flight to safety that we're starting to see? Whereas we've not seen that happen anytime recently, as you can see there. So we're just seeing this disparity in the markets again. There's some funky things going on with bonds as well, but I just can't help but have little confidence in these latest rallies. Is the turn coming? Are we watching it? Is it a blow off top? Is it just going to be a retracement for the continuation, or is there actually going to be a larger corrective move? So I remain a very nervous bull. Overall, I'm playing currently the moves intraday with the premium poppers, which we'll look at in a moment, while I'm waiting for clear and concrete swing setups. So over on the swing setups, again, we can see the bearish tag and turn that we sidestepped in. And just a reminder, we've got this MACD V extreme down at the bottom, but we can see it's just coming out of that extreme. So when that happens, typically the 24, 48 hours later means that we're out of that extreme reading danger zone. Unofficially, again, I'm just doing the research on this. Again, this is actually a price strategy I'm trying to integrate, but the percentage are also out of that extreme. Again, it doesn't mean that we're going to see a bearish sell-off. What it probably means in this context is because we've seen a straight line movement, we're probably going to see price rest. We'll see the market just pause. Not unexpected when we think that non-farm payrolls is on Friday. So a little bit of a pause, hesitation ahead of Friday's non-farms. Similar deal on Uncle Russell. We do have the bear tag and turn here. It has flipped over. It's given us the warning, reduce your position size. It wasn't reading as a skip. We are outside of the MACD V extreme, so it's starting to shape up. But I do suspect, similar to the S&P, is that we're going to see price meander sideways briefly ahead of non-farm payrolls. We are seeing the vol and band compress on both, so that just really supports that the volatility is contracting, or the price volatility is contracting more specifically. So with again, another little clue here, with just the nibble at the new all-time highs, it just took it out by a few ticks, and then we saw the turn. So just no follow through, there's no buying. So is it a false breakout? Is it a liquidity grab? Is it going to just shake out the early bulls, the retail bulls, essentially, the I don't want to miss the move bulls? Do we retrace down? Is it going to be a genuine breakout move, or is this the start of the next more serious bear move? Over on crude oil, we do have, again, we've had that break through the bull zone that I was looking at. Again, it conveniently didn't provide any buy setups for us to discuss. We were looking for them, but they just didn't occur. We see price just pushed straight through that and collapse, and then we get the rally back to the V up. The V up's anchored from the start of this move here, that's breakdown move. So sell the rally, V-shaped entry right there, vertical lines where I entered, and again, standard stuff, sell the rally. Now, because it's option selling that we're doing in credit spreads, that we're going sideways, not a big deal. So just that time decay is doing me some favors. As it's pushing low, we should see that profit target reaching. We don't need it to get to the green line. That's just really bonus from the charting point of view. But as long as it just grinds side, as long as it doesn't go up, I'll get paid, which is always a great place to be in. The other thing that I'm looking at, easier to see on the point and figure, but we've got that triple bottom just there. Again, it's almost like this is a bear flag type pattern if we were to do the more traditional point and figure type, the more traditional charting on the point and figure. So as price goes through that green line, that's going to provide a bear setup. So $74, and we could see a nice quick move down to 70 and 65 would be the next target, which is what we've been talking about. If price had got below that support or this kind of $80 area, if we got through that, we were talking about last week and earlier this week, we could get down to $65 and just retest those lows over there. Looking at the premium poppers are popping against standard breakout setups on both the Russell and the S&P. S&P was first and third breakouts very close together, just off the left of the chart. It's not too clear just because the expert advisor here is just overlaid it, but we do have that first breakout. It did initially get me bullish, and I just had to just manage that trade and close it for a small loss. So initially the first breakout trade was the small loss. Then we get the reversal. Now, interestingly, this opposite trade, so we get the bull breakout and then the opposite breakout. These are actually, the bull trade is dead, the bear's prime. These actually get extra consideration. So we've got the bull setup was, again, a normal type of setup, similar to SPX, but this bear setup here that we're looking at, this gets, again, some extra consideration because we're flipping direction. These turnarounds, usually quite good. There's an old adage which turns out to be true from all the research that I've done. A failed buy signal is a good bear signal. So it's not an immediate, it's not an immediate sell signal. You still need to wait for the setup, but it's that bull setup failing that goes back through the opening range there. That's the setup, and it provides a really great opportunity to the point where you might go from a normal position size into double position size because it just bumps the trade expectation up quite considerably. Anyway, let's look at the details. They were the setups. I had multiple trades along the way. I also looked at trying to land an average day's move. So we're looking at some extra strategies in our live calls, both in the morning session and just trying to take advantage of what the day may ultimately bring us. So we've got multiple profit tents on SPX. We locked in. Again, these are just all one contract trade. This is on the challenge account where I'm trying to take a small account to a big account in the fastest time possible. And we had a locked in $315. You can just see it across the top there. Locked in $350. Doesn't matter what happens at this point. The day's only going to get better. So if price had done one of those turnaround days that we've seen quite frequently this year, we have the opportunity for up to 815 on one of the profit tents, and if we get a partial profit, which we've landed several times in the last few weeks. Over on Russell, it's not as clear. I didn't land the transformation trade on the last one, but I'll take the max profit on that anyway, just because that sell-off happened right at the close. We were just hovering around. If we go back to the chart there, we were just hovering around that 30. This 30 zone. So we could have landed the pin there. Similarly with the S&P, we almost landed the 40 pin, but just that sell-off in the last 10 minutes, I mean, I'm not complaining about that whatsoever, but the Russell just grinds sideways, and we just get to the other side of that 30-20 strike again. It didn't quite get me my transformation trade where I can lock in the profit. And what would have happened is these red zones would have lifted above the zero line to guarantee a no-lose situation. So I was rolling the dice a little bit, but there's little I can do in the last 30 minutes of the day to try and do anything with that. As always, the students and the communities are landing the profits once again. So Don, James, Chris, Ellis, well done you one and all. And again, we're just seeing some great profits. Again, the community just consistently following the setups, consistently following the process, and consistently reaping the rewards. As always, I am not smarter than the data. My opinions don't matter at all. I am attempting to follow the system as closely as possible. My opinions do creep in, but ultimately I'm aiming for less brain so that I can get more gain. And if you'd like to learn a little bit more about how to apply a rule-based systematic trading system to collect morning income or weekly income, like what I do, then the links are in the description, or you can go to antivestor.com. So that's all for today. Happy trading. Less brain equals more gain, and that means that your trade should hopefully be smoother than a cashmere codpiece. I'll leave you with the lovely visual, the meme of the day, and I'll see you at the same time next time, probably tomorrow. Bye for now.